Dr. Ahsan is with us. Dr. Ahsan.
Yeah, I'm here.
Okay, inshallah, we'll start the program now.
Inshallah.
Assalamu alaikum wa rahmatullahi wa barakatuh. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. Alhamdulillah rabbil alameen wal aqibatu lil muttaqin was salatu wassalamu ala rasulihil kareem wa ala alihi wa sahbihi ajma'in amma ba'd. نادي الاقتصاد الإسلامي بجامعة الكويت. I would like to welcome all participants, especially lecturers, students, and professionals from around the world, and especially today's guest speaker, Dr. Ahsan. We'll welcome you, and we are welcoming you to this special lecture, and also would like to thank you very much for joining us in this lecture. And before we start the session, let me introduce our guest speaker today, who is Dr. Ahcene LAHSASNA. Is currently a Chief Executive Officer at the Salihin Shariah Advisory in Malaysia, and also he is Chief Academic Officer in Salihin Academy. And Dr. Ahsan is also a council member of the Malaysian Financial Planning Council, which is MFPC. And also Dr. Ahsan was associate professor in INSIF, Malaysia. And he is also the recipient of Global Business Leadership Award in 2017 and in 2019 in Islamic finance. So it's our privilege and honor to have Dr. Ahsan today as a guest speaker in Nadi al-Iqtisad al-Islami series of lectures. So without further ado, let me invite Dr. Ahsan to deliver his lecture. So welcome, Dr. Ahsan, and the floor is yours.
Thank you very much, brother. Appreciate your kind introductions. And I'm very pleased to be part of this forum. And thanks for the Nadi al-Iqtisad al-Islami for its kind invitation for this a series of lectures, which is more about Islamic economic and finance. And my topic today is more on the Sharia compliance requirements in Islamic banking and product and services. And we have, I think, we have around 1 hour delivery or less. So we try to make it short, maybe within less than an hour, so we can give more time for the questions and more interaction. Is my voice clear, brother?
Yes, it's clear.
Yeah. Thank you, Shukran. So basically, I try with the foundation and a concept of Sharia compliance. And before that, why Sharia compliance is important. And as you know, it is Islamic banking, at the end of the day, it's about compliance to the Sharia requirements and rules. How do you distinguish your product offering and services from the conventional one? Islamic banking is an alternative solutions for the conventional product and services. And as a result of that, when you say in Islamic banking, typically and by default, we are talking about offering business banking operations and activities by the Islamic financial institutions according to the Sharia rules and requirements and principles. So as a result of that, we are talking about compliance. So compliance is a core business driving elements, and it is the selling point for the Islamic financial institutions. That's what it is so important. And Sharia compliance basically refers to the compliance to the Sharia rules again, and which is reflected operationally in the decisions of the Sharia board or the Sharia committee, which is a part of the Sharia governance structures of the Islamic financial institutions, who have the mandate basically to provide directions, provide decisions, guidance when it comes to the compliance in the business of the Islamic financial institution, which is normally reflected in a form of product and services to retail and corporate business. So that's, on broad concept, and with some of the approaches that related to the compliance process, it is actually a course of actions that uh, ensure the compliance in the product, facility, services, and operation, transactions, and the executions to be in line with the Sharia again requirements. And this compliance is screened through what's so-called the four lines of defense that we are going to talk about it later on. So those lines of defense that has been set as a part of the Sharia governance and part of the risk management structures and policy, basically, its objective to ensure that Sharia compliance ensures. So it's a kind of filter, some kinds of different levels of screening, different level of evaluations, different levels of examinations, different levels of reviews. What has been left from the first line will be picked up from the second line. What is left from the second line will be picked up from the third line. What is left by the third line will be picked up for the fourth lines. And the objective is to ensure, at the end of the day, all will work in such a teamwork to ensure the compliance of the Islamic financial institutions. But whatever you do, some of the overlappings here and there, some of the mistakes, some of the non-Sharia compliance events still will happen, from time to time. And this kind of Sharia governance is in place to address those issues. So it doesn't mean when we say Sharia compliance, the financial institution in its product and services is 100% zero free from any potential violations of the Sharia requirements. That's not the idea, because even as a human being, you do mistakes. And as a result of the mistake, you do tawbah, repent to God. So that's the same when it's come to the Islamic financial business operation. The objective is to comply, but in the course of compliance, you may do some mistakes. And those Sharia governance structures and line of defense, they play a role to do rectifications and put back the operations into compliance. So let me give you a bit of flavor how important is the Sharia compliance, at least in the context of Malaysia. And in Malaysia, in the section 28 and section 29, it is clearly mentioned that the compliance by Sharia requirements is a mandate by the law according to the Islamic Financial Service Act 2013. And violations of and failure to comply with the Sharia requirements will trigger basically a kind of penalties by the law. And according to section 28, any person who failed to comply with the central bank standards with the Sharia compliance in overall will commit an offense that if upon convictions he will be liable for imprisonment of 8 years or a fine of 25 million. So this is a kind of a very strict requirements from the regulators that has been captured clearly in the Islamic Financial Service Act 2013 in section 28 and in precise also in section 29, shows how severe is the violations of the what's so-called the Sharia compliance. It's not like in a way you take it easy whether you comply or not, so we'll catch up later on. So it is a serious offense if it is proven, and some kind of course of actions could be undertaken by the regulators as a result of it. So it is very important. That's why the culture of non-Sharia compliance in the context of risk management policies at the financial institutions level is a very what's so-called well appreciated, and if it is a very what's so-called seriously enforced through educations, through review, through basically building a culture of non-tolerance of Sharia non-compliance in the operation. So let me define the compliance again in the context of Malaysia. Then I will go out of the box of Malaysia to see how is the compliance could vary from one country to one country. And here is triggered in your thoughts also the madahib, the history of the school of law, whereby the compliance could be defined according to the school of law, even though in principle we are talking about Sharia. So here, basically, if you look at the what's so called Section 28, when they talk about the compliance, they talk about compliance with any ruling of the Sharia Advisory Council in respect of any particular aims and operation, business affair, or activities that should be deemed to be compliance with the Sharia. So here, in the context of Malaysia, definition of Sharia compliance will be regarded and understood as follows. Keep in mind first, I'd like to remind you that we are talking about um, compliance of an Islamic financial institutions in Islamic finance industry. If I rephrase, we are talking about the compliance in a regulated market. In other words, we are talking about the compliance of Sharia in the context of a high regulated market, whereby there are specific law and regulations, that are specific standards and guidelines. So sometimes there are what's so called councils of Sharia advisory at the national level. So that one, it has to be understood in that context. So you cannot isolate the compliance from these features because you are not operating in a vacuum, but you are operating in a high regulated market whereby on the top of it is the central bank and the Security Commission that supervise and monitor the Islamic financial institutions business operations. So here in the context of Malaysia, I will go from Malaysia to Dubai, then I will go beyond that. In Malaysia, in order to define the compliance, you have to comply with, of course, the Islamic Financial Services Act, um, which is 2013. Number two, you have to comply with the regulations and guidelines provided by the Security Commissions and the Central Bank, because Central Bank and Security Commissions, of course, in Malaysia here, the Islamic banking and Takaful is governed, regulated by the Central Bank, and the Islamic capital market is regulated by the Security Commission. So whether you operate in a commercial bank or an investment bank, meaning whether you operate in Islamic banking, Takaful, or Islamic capital market, there are some guidelines regulations which are basically issued by the central bank. So you have to look at that. Also standards guidelines issued by central bank and security commissions. So those standards and guidelines should be appreciated as part of the compliance process because they have been issued for the Islamic financial institutions. So it's become a concern when it's come to the compliance. And also in the context of Malaysia, we have what's called the Sharia Advisory Council of Central Bank and Security Commission, which have a kind of resolutions that has been issued from time to time, which is a binding on the market. And this is why it has been captured in Section 28, whereby they look at the compliance. If you comply with the Sharia Advisory Council of the Central Bank, you'll be regarded as being in compliance with the Sharia. So you cannot, in other words, Islamic financial institutions and the Sharia board, they cannot go against the resolutions that has been issued by the Sharia Advisory Council of the Central Bank and the Security Commissions, because they are resolutions which are applicable throughout the industry. And the other, the last level is the compliance with the resolution of the Islamic financial institution, taking into account that every financial institutions that operates globally, it has a Sharia board or a Sharia committee. So this Sharia committee also, their resolutions are in force and binding. And as a result of that, if you operate in a specific market as an Islamic bank or a takaful or an investment bank, so basically you have to comply with all this. You have to take into account when you address the compliance with all this. You cannot segregate one and the others, or you cannot isolate or delete or eliminate one and you subscribe to others, but you have to take into account all this together. In Malaysia, failures to comply this, basically, that's the penalty that we have mentioned. Now, if I go, before I go to the international level, if I take the United Emirates, Arab Emirates as an example, Dubai as an example, so basically they have regulations. Also, you have to comply with the regulations, and they have also what's so called now the high, what's so called high Sharia Council at the central bank, similar to Malaysia. Their resolutions are also binding. So you can see the model of Emirates and Malaysia are close to each other, whereby there is a law and regulations, there is some guidelines and standards issue in the market, which are binding, and there are resolutions of the high Sharia authority at the central bank level, which are also binding, and also there are what's so-called the Sharia board at the institution level. So all this together will define the meaning of compliance. Now, going to the international level, the compliance is defined a bit differently at the international level. Why? Before that, if I go back just to Dubai, now what is unique also in Dubai and other jurisdictions as well, compared to Malaysia, is that the IOP standards are applicable and enforced and binding. So IOP are binding in Emirates. And as a result of that, so it is not only the law and regulations and the Sharia Advisory Council or the high authority at the central level, but the IOP standards. So you have to comply with the IOP as well. And as you know, for IOP, we have Sharia standards, we have accounting standard, we have auditing standards, we have what's so-called governance standards, and we have also the code of ethics standards. So all these standards, so basically you have to comply with. And IOP has, as of now, of course, the published 2015 publication is up to 56 standard, but now it is more than 58 standard, including the non-published one. So those standards basically are applicable and binding in the market. So in Dubai, if you operate in Dubai or in Emirates, so in addition to those guidelines, you have to look at the standards. If you look at the letter of credit, you have to take into account the standard of letter of credit. If you do takaful, you have to take into account standard 26 and standard 41. If you do, for example, murabaha, you have to look at standard number 8. If you do ijara, you have to look at standard number 9. If you do forex and trading currency, you have to put standard number 1. And it goes like this. So standards of IOP become very relevant and important in the context of countries who enforce IOP standard like Bahrain, like Jordan, like what's so-called Emirates and other jurisdictions as well. So that's additional point you have to add as a component to define the compliance in the products and services offered by the Islamic financial institutions. Now, if you go beyond that, when you define the compliance here, so basically you will go to jurisdictions which basically don't have, number one, a specific law. They don't have a specific law or regulation. They don't have a law that has been enacted by central banks or parliament or any body. They don't have guidelines and standards. They don't have high Sharia authority at the national level. And if they don't have, it's not binding. I think maybe in the example of Kuwait, if it is relevant, if I'm not mistaken. There is a high level, but the resolution is not binding. So what you will be left with, you will be left with the Sharia board only. And the Sharia board, at the level of the institutions, they are the one who will define the Sharia compliance. So here again, defining the Sharia compliance goes according to the structures of each jurisdictions. Of course, at the high level and the broad level, we are talking about compliance with the Sharia rules and regulations. Yes, but here we are talking about an area of diversity, meaning that it could be a different Sharia opinions on a specific issue, different school of law, different Sharia scholars in the same country who may debate some issues on the permissibility or otherwise. So in these environments of debate and diversity, how do you define the Sharia compliance? That's what we are talking about. And as a result of here, to overrule the debate that could be in the market, so it goes back to the nature and the structures, how the jurisdictions is the structures and set. And we have given, for example, the case of Malaysia, we give the case of Dubai, and the case of other country. For example, even minority country, if I take the example of Kenya, they have a few Islamic banks, one takaful operator, one takaful, two pension fund Islamic, and I think four or more Islamic banks. And it is a minor, it's a non-Muslim country. So again, there is no regulations or law, there is no Sharia Advisory Council. So basically, the compliance in Kenya is defined based on the resolutions of the Sharia board on that specific institutions. So the Islamic banks or the Takaful, their Sharia board will define the compliance, meaning whatever um, resolutions has been issued by the Sharia board that set the line of compliance standards that you have to comply with, and you have to look at, despite that there is a potential debate outside, despite that other scholars may look at the issue differently, because in an area of diversity, so we have to talk about the point of reference. Only the Sharia scholars that has been appointed by the financial institutions will define the compliance. And of course, we are not here talking about which one is best. We are talking about a phenomena that existed, because that one, it will be discussed on the Sharia governance. What's the models of Sharia governance has been implemented in Islamic finance, dual banking system, one single banking system, what's so called authority ID, centralized authority versus non centralized authority, and those things. I think that's the discussion in the context of Sharia governance, but we are not going to that. But it could be somehow related. But what we are trying to talk about here, how to define the compliance, meaning that if if there is a debate on one specific issue in that country, who has the authority to define the line of compliance, whether the product is Sharia compliance or otherwise, is basically in the context of the governance, Sharia governance, in the context of what's so called regulated industry. So basically, the Sharia board are the point of reference to determine the compliance. As long as the financial institutions, being a bank or otherwise, comply with the Sharia board in the resolutions, that's the line of compliance, despite there is some other scholars may view the issue otherwise. So that's the this issue of compliance and how to understand it within the international what's so called operations, and with the context of different models of Sharia governance, and in the context also of diversity. Of course, there are some kind of aspect that we should look at when we look at the resolutions. Here we have benchmarks, talking about the International Fiqh Academy as a benchmark. The resolutions, we are talking about the IOFI standards as a benchmark. We are talking about the IFSB standards as a benchmark. We are talking about the IFM standard as a benchmark. So those international financial infrastructure institutions that basically contribute to setting standards, guidelines, legal documentation, and so on and so forth, would be the benchmark to refer to. As I mentioned, in some countries they are enforced, and some other countries they are partially enforced, and there are other countries they are somehow implicitly enforced, and other countries they are regarded as a benchmark and as a guide, and other countries they are regarded as an aspirations to uplift the standards of the operation, the compliance to that level, and so on and so forth. So basically, each country has some level of stage, how much they have gone in Islamic finance. For Kilomat, Malaysia is more than 30 years. Other countries may be 20, others 10, others 5, others they are just starting. The others are planning to start. So you see, each country may have its challenges. Also, whether you operate in a Muslim country or a non-Muslim country, that also may have an implication. If you talk, for example, about UK have few Islamic banks, but basically it's a non-Muslim country. So again, when you talk about the compliance, how you define the compliance? The second point is about basically the second point is about the lines of defense, which are very important in order to address the compliance. First one, the risk management unit. The first one, basically, business unit, of course, and the risk management. Then the second line is the Sharia departments. Then second line is the risk management. Uh, I mean, first unit management and business unit, meaning that's the institutions, meaning the product owners who have been empowered to issue, to design the product. So they are the one who be responsible to make sure that the what's so called product is free from any discrepancy. Then it goes to the Sharia department who will do the screening and make sure that it is terms and conditions all are in compliance. Then it goes back to the risk management. Then the last line of defense is the Sharia audit. So those are four line of defense, which are basically practiced to address the issue of the compliance. The second point, talking about the importance of the compliance, of course, we have highlighted at the beginning, but just to re-emphasize, comply with the Sharia rules basically is a mandate. Um, Sometimes, if you have a law, it's a mandate by law. In the context, for example, in Malaysia, and UAE. So it's a mandate by the law, and if you don't have a law, it's mandate by Sharia law itself. And issue permissibility to accumulate wealth, avoid accumulations of wealth by a non-Sharia compliance means, meet the expectation of the shareholder and stakeholder, because at the end of the day, that's the selling point of having an Islamic bank. So that's the expectation of the shareholders and the stakeholders, distinguish between Islamic banking and conventional banking, ensure acceptance and validity of enforceability of the contract, and fulfill the objective of maqasid al-Sharia in wealth and basically business and finance. When we talk about compliance, also especially in the context of compliance policy, we have a general Sharia compliance uh, requirements on policy, which basically talking about ensuring the Islamic banking are in compliance with the product and services when it comes to the requirements as determined by the Sharia committee. Of course, we just said Sharia committee because in some jurisdictions they have only the Sharia committee. So that's the least, the minimum level of compliance is the Sharia committee. That's why we put it as a benchmark. But in countries where the regulations of compliance is sophisticated, advanced, and comprehensive, so we talk about different levels of compliance. But if you don't have anything, the least that you have is the compliance with the Sharia committee. Of course, all proposals relating to the product and services should be referred and obtain approval prior to the launching of the product by the respective Sharia committee. A pre-product approval, we are talking about reviewing the products from different lines, and this review will include the product structure and features, terms and conditions, letter offer, agreements, product manual, advertising, marketing materials, product illustrations, brochures, and other related documents. Because here we are talking about 360 screening of the product. So we're not talking about from one angle, and we ignore others. So we try to screen everything to ensure the compliance. Now, upon the executions, when it comes to the execution, which is regarded as a post-approval, so here basically it has to be also in line with the mandates of the what's called the Sharia committee, and the executions and the implementations should be also, of course, in product and services should be also in Sharia compliance. So meaning you don't compromise when it comes to the executions, because what we have a theory and practice. We have a product on the paper. Then after that, we have a product on the ground, offer in the form of product and services to the retail market and corporate. So again, moving from theory to practice, moving from resolutions of the products, approval of the Sharia board from a pre what's so-called a product approval to a post-product approval sometimes may represent a key risk area. Why? Because you may go wrong in the implementation. I think this one I will talk about it later on. because it's quite important. That's where the risk is, because some normally you will review screen the product and it is perfect, but when you go on the ground, you may key information wrongly, you may do calculation wrongly, you may type wrongly, you may upload wrongly, you may mess up the documentation, especially if you're on a dual banking system or using the leveraging model. That's where some of the discrepancies may happen. And the executions, you may compromise on the sequence, may compromise how the combination was advised, and so on and so forth. That's basically where the risk is. The risk is not mainly on theory, which is products on the paper, on the approval, but the real risk is upon implementation and executions that you may go wrong. I will talk about that later on. There is a specific slide on that. So again, from the perspective of the financial institution as at a high level, so what we have some parameters and some guidelines that normally guide the various products and services in the market. And this one has been, of course, prepared, set, and structured and approved by the Sharia board and implemented accordingly. So we have parameters and guidelines or standards, or sometimes we call it policies for the deposits, for the financing, for trade finance, treasury, investment, marketing, hedging, illegal documentation, and others, letter of credits, and so on and so forth. So those parameters or those guidelines, or in some bank we call it policies, those policies basically are reviewed and approved. And of course, sometimes from time to time, sometimes within a gap of 5 years, are subject to review and enhancement. And normally when some new guidelines comes in from the central bank, or new regulations, or a new amendment in the law, basically it will be impacted all this, most, I will not all, but most of the products. Then it has to go for a second review. Second review in order to enhance and comply with the new amendment, the new guidelines, the new directions of the regulator. So let me look at the compliance from a different perspective. So we were looking at it from a macro perspective. Let's look at it from a little bit from a micro perspective. So when we look at the compliance, so normally one of the key areas that we look is the Sharia contract. And in the Sharia contract, it has some Sharia requirements and some operational requirements. Both should be understood, and both should be basically applied in a very appropriate way to avoid any kind of discrepancy. And here we are talking about formation of the contract. We are talking about the standard requirements for a valid contract. We are talking about the terms and conditions for a valid contract. All this has to be looked at the what's so-called theory level, and of course, respectively, approved by the Sharia board. Now, the question I would like to pose here, why we look at the contract, why the contract is so important. And sometimes, especially if you speak to a conventional bankers who didn't hear about Islamic finance, and you tell him you want to do Islamic banking, this is what happened in Singapore, and this is what happened in most of the country who try to adopt the Islamic banking at the first time. They always will be shocked, when you tell them, well, Islamic banking, it doesn't operate in a borrowing and lending fashions. It doesn't provide loans. So what they do, actually, we do trade. What do you mean by trade? We do like buying and selling. Well, bank doesn't buy, bank doesn't sell. So it's not in the vocabulary, in the understanding and the mindset of the conventional banking. This is why first thing to do, they have to amend the law that allow banking do trading, because it's not within the scope of the banking definition. So that's why from Sharia standpoint, contract become a very important, because we don't do loan. We do other contract. We don't do loan contract. Loan also is a contract, by the way. It's a contract. Qard is a contract. But we don't do loan contract. We do others. So what are the others? We have a series of a contract, and normally we have a kind of mapping here. So if you can see, this is just an example. It's not really a full list. If you look at the deposit on the saving, you have the current and the investments and fixed deposits. So what you do, we do the mapping. What is the relevant contract that may match the what's so-called the existing products? And it goes to the financing as well. What are kind of Sharia contract that may match the product offering? Because keep in mind, why we do this matching, because sometimes people may say, well, how come you try to match the banking and not the other way around? Keep in mind that we are talking about banking, meaning we are so far operating within a banking definition. So we are talking about a bank. And a bank, we know what is bank. Bank has deposits and financing, trade financing, and wealth management. Bank is a bank. Like someone, you tell him, define restaurant. Everyone will define differently, but at the end of the food, serving food. If you define what else, hospital, you do whatever you do. At the end of the day, you go for treatment and seeking cure and so on and so forth. So we are talking about bank. So banking, you know what is banking? You may have a different definition, but at the end of the day, banking is providing products, and services and the deposit financing, trade finance, and wealth management to retail and corporate in a brief. So in order to capture the banking, so you capture the product. So what you will do, you will map the product against the contract and see if it does functions, and you revise the contract. You revise, sorry, the products to suit the contract. And at the end of the day, what we will do, we will revamp, we will restructure the banking solutions to be in compliance with Sharia. And as a result of that, the Islamic, the product offering in banking products and so on and so forth, deposits and financing will be operating according to the Sharia. Similar, if you go to restaurants which is not halal, Chinese, let's say you want to open a Chinese or Korean or Japanese restaurants. So what you will do, you want to offer it in a Muslim community. So what you have to look, what this kind of offering they have. So you have to look at the discrepancy are the non-halal items. So what you will do, you will remove the halal items, replace it with different things, revise these ingredients and the way it has been cooked to make sure all the process from A to Z is a halal. Then at the end of the day, you can put halal logo, or we offer this food to the what's so-called Muslim community. But you would keep the restaurant as a restaurant, you keep the Chinese food as a Chinese food or Japanese food as Japanese food, and you offer it as a halal. So that's where the examination, the revisions, and the screening, and sometimes do kind of financial engineering, dismantle the product, reassemble, restructure the product in a way to be in compliance. So the benchmark to that kind of exercise goes back to the contract. If you do a mudaraba, so you have to be to operate as a mudaraba. If it is a istisna, it is istisna. If it is ijara, it is ijara. So that's the important part of it. And again, for this mapping, when it comes to the compliance, sometimes you may be lucky that because that's the tagging result. Sometimes one product like house financing will operate in more than one contract. Murabaha, istisna, ijara, forward lease, musharaka mutanaqisa, maybe tawarruq and others. So you have a different contract, and here you will select the best based on the custom, based on the need, based on the risk, based whatever criteria. But sometimes you don't have much choices. Like for example, the guarantee operates on kafala. So that's it. You have kafala. You take it or leave it. You don't have much. And and based on that, the mapping will take place. And of course, the innovation will take place until we come to such kind of structure and mapping. So contracts are very important because at the end of the day, the list on the left is the product of the banking, and the list on the right are the product. Are the contract. And the Sharia, and when it comes to the definitions of the Sharia compliance, it doesn't go by the compliance of the product, but it goes to the compliance of the contract, meaning that declarations of the compliance of the product is subject to the compliance of the terms and the conditions of the Sharia contract. If all terms and conditions are in compliance with the Sharia contract, so the product becomes Sharia compliance. If the product compromises on any term and conditions on that Sharia contract, so discrepancy would be triggered. That's a very important point. And the same goes for the what's so-called takaful general and family. Same goes for the equity and the debt. Same goes for other products. So again, what we are saying here that the contract rules govern the product features, and the contract rules prevail, over the product in a case of conflict. That's why the contract are very important, and this is why if you look, for example, on the Central Bank of Malaysia, they issue what's so-called policy document. And the policy document has been issued not on a product base, but it has been issued on a contract base. So you have policy documents on Ijara, policy document on Murabaha, Tawarruq, Istisna, Salam, all these, Wa'ad, all these are policy on contract base. And the product should comply with the policy of the contract, not the other way around. And also, if you look at the IOF standards, also there is a standard on Murabaha. There is a standard of Ijara, standard of Musharaka, and standard of Tawarruq, standard of this and that, and it goes. So you go by products, then after that they go more beyond products, and they go by some selected instruments. But first of all, what is important in the early standard that has been issued by IOF are basically contract-based standards. Why? Because one contract may have an implications to different products and services, like Ijara. Ijara, you may find it in home financing, you may have found it in a car financing, you may get it in a machineries and other stuff financing, you may finish it you find it in sukuk, you may find it in REITs, and so on and so forth. So one contract may have a different implications and a different penetrations on a different product. So that's why the contract is more comprehensive than the product, and the product is part of some kind of Sharia contract. So in addition to the contract, because we are operating in dual banking system, another important point that we have to look, and I'm taking here the case of Malaysia, and you may take the case of Kuwait, whereby you have in one hand your policy documents guidelines, like for example, this list I have put here is the standards policy document that has been issued by the central bank where the institution should comply with. But on the other hand, what you have also regulations of the country. We have the Central Bank Act, you have the Security Commission Act, you have the Capital Market Service Act, Civil Law, Company Law, Contract, Hire Purchase, Stamp Duty, Sales of Goods, National Network, Income Tax, and so on and so forth. So where to go, left or right? So basically both are combined. And of course, here there is a small issue, I don't want to talk about it, but just to highlight it because I think it's in the mind of some of you, basically how to reconcile. So what happened here in Malaysia, they established what's so-called the harmonizations committee that look basically at the potential conflict between the Sharia requirement standard issued by the central bank and the existing law of the country and try to reconcile and see how to address the gap and recommend some kind of amendment whereby it creates a synergy between the Sharia requirements and the law requirements to avoid any kind of violations, neither to the Sharia requirements nor to the law of the country. That's different discussions. But bottom line is that as far as the issue is concerned, financial institutions are required to comply with both. And this is why when you look at the terms and conditions, when you look at the legal documentation, they are not 100% driven by Sharia compliance per se, but it is a combination of the two. So this is why what you have the Sharia law, you have the common law. If you are operating in a civil law, you have a civil law, and we have the market best practices clauses, and you have stipulated term and condition. That's how is the contract and the legal documentation, the product is basically drafted and designed. They are not 100% Sharia. Even it is a murabaha. We say, well, this is a murabaha contract facility, but in fact, if you go and screen, it is not 100% pure murabaha. It is a combination of the murabaha requirements and a common law if you're in a common law requirements, or a civil law if you're in a civil law environment, plus the best practices, which has been undertaken, adopted by the market as the ORF and the commercial ORF. And the other thing is whatever terms and conditions has been subscribed by the different parties, because al-Muslimuna ala shurutihim, and you are allowed to add additional shurut, terms and conditions, as you wish, as long لا تحرم حرارا ولا تحلل حراما. You don't compromise on Sharia requirements. This is why, as you can see, the result here, you have a Sharia condition, common law or civil law condition, then you have the contracting party condition all together for what's called the compliance features at the broad level and from the biggest pictures when it comes to the illegal documentations and facility. And this is very briefly on the what's called what are the Sharia requirements at the contract that we have highlighted just now at the micro level. We have, of course, 6 pillars of the contract: price and goods, seller and buyer, offer and acceptance. And we have around 11 or more conditions you have to comply with to validate the product. This is just high-level description. I don't think we have the time to go into details on this, but this is a kind of the point of reference to define the contract compliance level. Then we have, I think, compliance. We have mentioned it on the standardization of the compliance requirements. We have at the international level, IOFI, IFSB, IFM, and others. And in Malaysia, we have, of course, Bank Negara and Security Commission that try to issue guideline standards to harmonize the practice. International, of course, we have, this is the IOFI. We have IOFI standard, Sharia standard, accounting standard, Sharia audit standard, and Sharia governance standard in the Code of Ethics. We have 5 standards. And this is the IFSB standards. I just browse it. I'm not going to go through it. This is just for your reference. The IFSB technical note and the IFSB guidance note. Then we have the IFM. IFM is more on the financial market, money market, and the Islamic capital market. You will see the what's called the international financial market. This is some of the standards that has been issued by the Central Bank of Malaysia. And as you can see, murabaha, tawarruq, istisna, musharaka, mudaraba, ijara, wakala, kafala, hiba, all these are a policy issued based on contract, not on product. Why? Because contract is more comprehensive, and we are concerned about the compliance of the contract. Then what you do, you have to restructure the product to suit the contract in order to declare it compliance. Otherwise, you may have a discrepancy. This is some of the other guidelines. Now, I just want to maybe discuss this one briefly because we are in the last 2 slides. Then maybe you have a, let me just briefly, since I still have time, maybe within just 5 minutes. This is the one I have mentioned it before. When it comes to the execution, the Sharia risk at the level of the execution, the potential discrepancy and violation when it comes to practice, this is what you can see. Why I'm saying this? Because at the theory level, at the product level, product is structured and designed, approved by the Sharia board. No issue on that, has been reviewed, have been in you go on the ground, implement, you may go wrong. On the structure of the product facility, on the violations of potential terms and conditions or TNC of the banking or the PTC, principal terms and the condition in the Islamic capital market. On the executions, here we are talking about the sequence of the product. If you are talking about ijara, for example, operating or financial lease, so you have to own the asset, then you lease it out. If you are talking about murabaha, murabaha actually has stages. It may happen maybe in the 4th stage. So normally we have the promisor and the promisee in murabaha, which is stage 1, the undertaking and the wa'd. Stage 2 is the security deposit, hamish al-jiddiya. Stage 3 is basically the agency, if there is an agency, whereby you will be appointed to carry on the agency. Stage 4 is basically buying of the asset by the institutions. Number 5, which is stage 5, is the murabaha. You see what is the murabaha is number 5. So promisor and promisee, security deposit and hamish al-jiddiya, agency and principal relationship, buying and selling from the original supplier. Then stage 5 is the murabaha. Only stage 5 murabaha happen. So we are talking about sequence in the executions. So you can, Murabaha cannot happen in stage 2 or stage 3 or stage 4. It is in stage 5. So the sequence uh, is a very important. Uh, the other issue is the combination of the contract. Combination is also an issue in the executions. If I go back to the Murabaha, normally Murabaha, it has a kafala, right? And sometimes IOF allow that the clients or the purchase order himself could be a kafir, could be a kafir, but you have to have what's called separations in the contract and the obligations and the responsibility. And you have to draw a line when the kafala finish, because uh, the kafala it start from the purchasing of the contract, the asset from the suppliers, and it end up on the possessions before selling. Before murabaha starts, before the execution of murabaha, basically the kafala were retired, and basically the risk would be transferred to the client. Also, the agency in the same IOF allowed with some conditions that the purchaser, the amil, the purchaser order can be also a wakil. So again, when the wakala start, when the wakala finish, and the distinctions between kafala and murabaha and an agency. Those are very important aspects how to design and structure the product to ensure compliance in the executions, whereby you don't compromise on the sequence, number one, and number two, you don't compromise on the combination of the contract. And the other one is basically the other issues related to the marketing, branding, event promotion, sponsoring of event and others. Those are also could trigger Sharia non-compliance. It has to be reviewed by the Sharia board. The last one is basically looking at the compliance in the form of substance, which I would just mention that Islamic banking is an institution that make profit, and also it operates within the single or dual banking system, and the banking is based on the financial intermediations, and basically the Islamic banking are subject to the law of the land and some Sharia requirements. All this, it could not be ignored when you operate in the Islamic financial institutions, especially on the financial intermediations. It's very important to be understood. You cannot determine the compliance of the bank similar to the compliance of a supermarket, like I don't know, Tesco or whatever supermarket you have in your country, Carrefour or in, meaning you cannot put the traditional market similar to the banking, because they are in two different markets. The definition of the market of the banking is different than the others. And the same for the stock market. Stock market, you cannot define that market similar to a market where you pick up products, put it in plastic bag, and you go home. That Islamic stock market is different. You may buy stocks, you sell stocks. So you don't go and scan and enter, so you log in. So those issues and matters have to be clearly understood in order to appreciate the nature of the operation of the institution. Number two, to define the compliance accordingly. Like, for example, possession. Possessions, the normal possessions that you pick it up with your hand or you receive it with your hand. But possessions in Islamic banking sometimes is defined differently. We're talking about not physical possession, we're talking about constructive possessions. Talking about ownership, we have legal ownership, beneficial ownership. And we have spot. Spot basically for you is a second. The spot maybe is a T plus 3. T plus 3, it is defined differently. And you go on. So those features, on the parallel istisna, on the parallel salam, on the parallel ijara, on the what's so called constructive possessions, liquidations. For example, liquidations, you liquidate and sell the asset, but we have here what's so called the constructive liquidations, a tandid al-hukmi. It is not a tandid al-haqiqi. So those features and the extent of it has to be understood well. So you put them in the proper context, then you, according to that, you apply it accordingly, then you appreciate the Sharia compliance. Otherwise, you may not digest, how those things have been basically applied and based on what justifications. And the last point I would like to share is that you have to understand that bank is acting in a different, and this is a bit challenging when it comes to the lawyers and legal documentations. Why? Because banks could be sometimes the sellers, so could be a buyer, could be a partner, could be investor, could be intermediary, could be a brokers. So it's not one position. Not like in the conventional, most of the time is a lender. No, here the bank may vary, and then more than that, in the same facility, not only as an action uh, profiling the bank, but in the same like Murabaha. Murabaha, the bank could be in the same Murabaha. I'm saying the same Murabaha, the bank is a promisee. The bank is a principal in the what's it called wakala is a principal or a kafil or in the what's it called a kafala is a buyer. And after that, he's a seller of murabba. So you can take four positions that may vary and transform in the same facility. I'm not talking about as a profile. Is the same facility in the Murabaha. That kind of transformations has an impact how legal documentation should be drafted, how the TNC, terms and conditions, should be drafted, and how you define the discrepancy and how you draw the lines and the stages from what to another. It's a bit challenging, I understand, but as long as we go with the practice and with technology and facilitating and simplifying the flow of the business transactions, I think there is no issue to comply with that. Other terms that should be avoided, like late payment interest, default interest, borrower lender, borrower money, base lending rates, compounding, and so on and so forth, are not within the overall terminology of Sharia. I think with that, I'm come to almost my 1 hour. And let's give time for any questions or any comments from the participant. With that, thank you very much. And assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Alaikum assalam wa rahmatullahi wa barakatuh. Barakallahu feekum, says mashallah. The topic was brilliantly explained and also well presented, mashallah. Alaik barakallahu feekum, says jazakallah khairan. So I think we do have about half an hour time. So let's give some times to participants who like to ask any question, or if anybody needs any clarification or needs to know about anything relevant to the topic. So I open this floor for participants. Either you can write a question or anything in question and answer section, or you may raise your hand in participant section. So we can switch on the microphone for you and then you can talk. So please welcome whoever would like to ask anything. Either you can raise your hand or you can write your question.
I think there is a question here in the box.
Yes, please, Doctor. You can proceed. Yeah.
Yeah, there is the questions, from the Mahmoud on this sukuk. Issue sukuk not compliance with Sharia law due to some conventional banks open some Islamic windows. Well, let me, because I'm not sure about the issue exactly in his mind, but let me just comment on this. Well, when it comes to the sukuk, because I understand some of the people are concerned, even sukuk could be issued from a conventional banks. Yes, sukuk are basically a product, which is an Islamic product, could be issued from a conventional bank or an Islamic bank. What is matter is that the compliance of the offering. As I mentioned, if you have McDonald's in US, which is not halal, and you want to open a McDonald's in Kuwait, and you put the restrictions and the compliance that should be halal. So you don't have an issue on that as long as the halal is observed and the Muslim will benefit. So the owner of the shop, it doesn't matter whether he's a Muslim or not, or whether he's a conventional institutions or Islamic institution. And I always put this examples just to put a very clarity on this. If you have a Muslim selling non-halal and a non-Muslim selling halal, from whom you will buy? I mean, if you have a Muslim selling non-halal and non-Muslim selling halal, typically, definitely you will buy from the non-Muslim who's selling the halal. So we don't look at the entity and the provider, then we look at the product itself. And sometimes we feel that Islamic finance could be hijacked, and taken by the conventional banks, or the West. I think we hope that, I mean, we pray and we hope that the Islamic finance will be hijacked by the West, because they are hijacking the halal, meaning that you are talking about reducing the riba and putting an alternative solutions. So we shouldn't be worried that conventional banks coming after Islamic banks. I mean, after us, the Islamic financial product and facility will like that will do, because at the end of the day, the haram or the riba space will shrink, reduce, and the non-riba will spread. That's number one. Number two, the non-Muslim in other non-Muslim country will benefiting from this product because it's a halal. At the same time, the haram will be reduced. Similarly, if you tell me there is a franchise based on US want to convert all the franchise restaurants into halal, will be happy. The non-Muslims will eat halal, and the Muslim will eat halal. And Muslim can work in those restaurants and can enjoy, having a job and income. So we don't have an issue, who's and as in Islam, we are allowed to deal with non-Muslim and non-Muslim. So what is important is the compliance, regulations on the law and the enforcement. And this is why we have a line of defense by putting the Sharia board as one of the lines of defense, or putting this fourth line of defense to ensure the Sharia compliance. Whether you are a conventional a parent bank or you are a window offering, so the compliance cannot be negotiated. It has to be in compliance. And even they are looking for the profit. I mean, why not? I mean, for us, we are looking for both, offering the halal and looking for the profit. If they don't look for the profit, it doesn't matter, as long you are seeking a profit in a halal way. As long you are seeking the profit in a halal way, no issue on that. But if, of course, the sukuk has some issues, some problems on the compliance, that's a different issue here. So, of course, here we have to look at the sukuk to make sure they have been issued in Sharia compliance manner, and there is no what's so-called issue in the offering. So I'm not sure whether this is the part of at least touch the question. And in order to ensure the compliance here, how we can over those issues and maybe compliance in the context of sukuk guru, I think we have a guidelines here. What's so called, we have the standard 17 of IOFI, which is a benchmark on the sukuk issuance, and what's so called, each jurisdictions like Malaysia, they have a sukuk guideline, and the Emirates and others jurisdiction, they have sukuk guidelines, and in addition to the Sharia board that they will look at the sukuk compliance to ensure it is basically in compliance and there is no violations of Sharia rules and principles. One of the issues that's that the procedure, which could be a part of the concern in the past, that the proceed of the sukuk could flow somehow to the conventional space. And basically, there are very strict regulations, rules, requirements by Security Commission of Malaysia, by the sukuk standards, that the sukuk issuer has to declare and express where is the proceed is going. So we don't allow definitely that the proceed goes to the conventional space to serve it, but it has to go to some Sharia compliance activities. Wallahu a'lam.
Yeah, thank you. Thank you very much, Doctor. I think you can proceed. There are two other questions.
There are other questions, huh?
Yeah, you can just proceed, Doctor.
Sense that for the standards, separate entity that review them and update them. I don't know whether they are referring here to the IOP standards or others. But yes, like IOP standards, if you're referring to the IOP standards, definitely they are in the process of review. This is why if you look at the 2010 publications, is different than the 2015. And in the 2015, normally, if it is the standard is review, they will put a star, below that this one has been revised, meaning it is a revised standard. So you have to refer to the updated one. Like Murabaha is revised standards. Like for example, I think Sukuk is revised standard, and so on and so forth. And the revisions, I think, yeah, the revisions, it could be done internally. They could outsource by third party for update. That's basically goes back to the IOC. Um, so I think the others. Yeah.
It's a personal question, I think. Yeah.
Uh, yeah, you can just drop me email, Abdurrahman. I will come back to you on that. But I think there are different institutions offering postgraduate programs. You just drop me email, we can guide you on that.
Yeah, thank you very much, Prof. Let's see if anybody else would like to ask any question. I think if you have any question, please do ask freely, because we are waiting for the question. Yeah, I think there is another question. First, do they have to comply to different standards?
Yeah, here, yeah, actually, this is an important questions, and sometimes maybe it's a bit tricky questions. How to respond to this? You see, if you are operating in a country where IOP standards is in force, so definitely you have to comply with the standard 17. You have no choice. You have to comply with that. And it's part of the, because it's part of the compliance. Now, if you are not in a jurisdictions where IOP is not enforced, like for example, Indonesia, Brunei, and other jurisdictions, including some of the Maghreb country, African countries, including I think Saudi Arabia. So basically, compliance of IOP is not required at the issuance level. At the issuance level, I try to be careful here. At the issuance level, you are not required to comply with IOP, but you are required to comply with the security commissions at that jurisdictions. Like for example, in Malaysia, you have to comply with the security commissions guideline. And other jurisdictions, you have to comply with their central bank or security commissions guideline. And the sukuk could be issued because the compliance here is determined by the endorsement of the Sharia board, whether it is in compliance with IOP or not. That's at the issuance level. Now, on the sales, marketing level, the one who issue non-IOP compliance sukuk, he may have a problem to sell those products in those jurisdictions. This is why if you are targeting your customers and your clients, and you are targeting your sales of sukuk, let's say to some of the Middle Eastern countries, you are targeting, let's say Bahrain, you are targeting Dubai and others. So in order for your product to be sold there, you have to comply with IOP, because if there is a sukuk have been issued, so before it is subscribed, or before you purchase, or before you put that sukuk to the retail market, to your customer, you have to get the Sharia approval that this is no objections on this, and this is in compliance with the IOP. So I've just recapped. If you are in a compliance jurisdiction or IOP, you have to comply with. If you are not, it's not a requirement, subject only to the endorsement of the Sharia board. But you may have a problem in selling. If it's not in compliance, those sukuk may not be sold in those jurisdictions. If you want to target, if I just give an example, Malaysia, for example, IOP is not enforced. But if Malaysia is targeting some countries where IOP is enforced, so they have to issue, what's so-called sukuk, which are IOP compliance, even though they have been issued in Malaysia, and even though IOP is not enforced in Malaysia, but because they are targeting to sell those sukuk in the Middle East. Like the latest sukuk that has been issued last month, it's a wakala sukuk by Malaysian market, but it has been sold in Dubai, and it has been marketed and has been approved by Dubai. Why? Because when they have issued those sukuk, they have to make sure that those sukuk are IOP compliant to secure their sales. Thank you.
Barakallah fiqh, Ustaz. Jazakallah khair. Uh, there's another question. Do
I try,
LFE standards? Yeah.
yeah, I try to be brief on the question so we can just. I think the question, yeah, do IOP standards cover currency? Yeah, conflict of shares. Yeah, for the questions on the currency, yes, IOP cover currency standard. It's standard number one, basically. Standard number one is talking about trading currency. Uh, and I think it's a good standard and quite comprehensive standard, and I don't see an issue in this, and easy to subscribe and to market, and it's not really challenging to the practice. So dealers, brokers could refer to that standard easily. So it's a standard, not codified, but it's a standard. And the other one is, yeah, I take note of your view, Brother Abdul Rahman. Thank you. Brother Hisham, it is hard to reconcile jurisprudence school to reach a previous provision that serve Islamic finance. I think that's what the IOP is doing, to be frank with you. Meaning IOP basically it is not driven by a specific Sharia specific school of law. It's not Maliki, it's not Shafi, it's not Hanbali, it's not Hanbali. The IOP standards, you may say it's above the schools. It's in compliance with the body and the knowledge and the heritage of the entire Sharia law from the beginning until now. So what they do, of course, they do kind of ijtihad. They try to look at the issues, try to debate, try to what's so called look at the practice and see what is the best. Basically, Sharia ruling from this knowledge that has been inherited, from all school of law, and recommend the best options. Of course, provided it is not weak opinion, it is not contradicting. There are some requirements, as you know, in the tarjih and the preference of Sharia rules. So that's what the IOF is trying to do, trying to take the heritage and recommend the best for the Islamic finance. Sometimes the standards is with the Hanafi, sometimes the standards support the Maliki, sometimes the standards support the Shafi'i, sometimes the standards for the Hanafi depends. Sometimes it is against the fourth school of law. Like for example, in the standard of musharaka, the fourth school of law, they don't allow the musharaka capital to be in kind. It has to be cash, the fourth school of law. But the view of Al-Awza'i and other scholars, a view that capital of musharaka could be in a kind, and the IOP subscribed to this view. So meaning that IOP has left the four school of law together and subscribed to another opinion, because that opinion is more convenient and more appealing and more and doesn't violate Sharia rules and more supporting to the nature of the capital structures in the modern finance. So that's what they're trying to do. The research that has been published and resolutions by the International Fiqh Academy and the also IOP standards are contributing to that kind of reconciliations and a kind of standardizations in the market. Yeah.
Thank you very much, Prof, for your wonderful explanation and also wonderful answers to the questions. So there are some comments from the participants regarding the courses and lectures in Arabic. If you may follow us in Nadil Iqtisad Al-Islami link in Telegram group or in WhatsApp group or in the official page of Nadil Iqtisad Al-Islami. If you write in Arabic in Facebook, you will find Nadil Iqtisad Al-Islami. So you will know our programs, schedule, and also lecturers. lectures. Normally, we do conduct lectures in Arabic and in English. So we do have Arabic lectures in other days, like Wednesday and other day were Friday and also Sunday. So we do have English courses and lectures on this Thursday and also Sunday, Thursday and also Saturday. So you can follow us in Facebook page or in the group. So you will know when is our Arabic lectures and when is our English lecture. And regarding the lecture, it's recorded in YouTube channel as well. We do have Nadil Iqtisad al-Islami YouTube channel. So you go to YouTube and search Nadil Iqtisad al-Islami. You will find the lectures. All the lectures are recorded there in YouTube. And also, we'd like to invite you in our next lecture tomorrow in Arabic, Maharat Mutaqaddima fi Istikhdam PowerPoint. It will be conducted by Ustad Rafa Al-Rawqi, inshallah. So you are invited to join at 12:30, Kuwait time, 12:30. And we do have also English lecture on coming Thursday, 3rd June, inshallah, at 12 o'clock, entitled Islamic FinTech Issues, Challenges, and Prospects. It will be conducted by Professor Dr. Yunus Sawalehi, who is Senior Researcher at International Sharia Research Academy, ISRA, and followed by another lecture on 12th June at 4:30 Kuwait time, 4:30 Kuwait time. It will be conducted by Sheikh Taha bin Hassan from United States of America. His topic is some challenges and solutions associated with private equity transactions, a case-based structural and Sharia analysis. بعد التحديات والحلول المرتبطة بصفقات الملكية الخاصة تحليل هيكلي وشرعي قائم على الحالة. So all are invited to join our lectures. So to know more about Nadil Iqtisad al-Islami, please follow us in Facebook group, Facebook page, Telegram group, and WhatsApp group. Thank you very much. So on behalf of Nadil Iqtisad al-Islami, we would like to thank very much to our special guest speaker today, Professor Dr. Ahsan, for your wonderful presentation and also lecture. I hope all the participants benefited from your lecture, alhamdulillah. May Allah bless you, may Allah reward you, Ustaz. If you have last word for Nadil Iqtisad al-Islami, and especially Dr. Ala Al-Ubaid, who is working hard to serve the Ummah, and also she is having this Nadil Iqtisad al-Islami by arranging various types of lectures and series of lectures in Islamic finance and banking and also in other fields of Islamic studies. So please welcome Dr. Ahsan for your last words.
For me, I don't have much to think. Just wish you the best, inshallah. Nothing much from my side.
Inshallah. Thank you so much, Prof. Inshallah, we would like to have you much more times, inshallah, in future, near future. And would like to thank all participants, lecturers, and students who joined the lecture today. Thank you so much for joining us. And lastly, we would like to thank Ustad Ala and also all management board members of Nadil Iqtisad al-Islami. And may Allah bless you all. May Allah accept this effort and also this khidmah, inshallah. Amin. With that, we conclude today's session, inshallah. Bismillah ar-Rahman ar-Rahim. Wal asri inna al-insana lafi khusr illa alladhina amanu wa amilu salihat wa tawasaw bil haqqi wa tawasaw bis sabr. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك والسلام عليكم ورحمة الله وبركاته.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you.